We are looking at, from page 4, example 1, restricted fund. In the last video, we went through page 4 and 5. And now we are on page 6, and we'd already finished looking at the beginning of the year financial statements. So that was January 1st, year 6. And now we're going to record some journal entries that happened during the year. Remember, we are using restricted fund method. Now, when you have a restricted fund method, there's different ways you can indicate which fund it's going in. Because you might have revenue for 3 different funds: general, endowment, and say capital. So you can either write down which fund the transactions are going into. So that's what I'm going to do on the paper here. However, on Connect, they just have you post to the correct fund. You don't actually have to choose it. The other thing you can do is put, say, revenue capital fund as an account name, and that would show it was going into the capital fund. So it's up to you. I'm just going to highlight it to remind you because you're new at this part. Accounts and wages payable and accrued liabilities at the beginning of the year were paid. So we go to accounts payable, wages payable, accrued liability. Notice we have 3 in the general fund, 1 in the capital fund. So we're going to need 2 different entries, 1 for the capital fund, 1 for the general fund. So under the general fund, we're going to pay off accounts payable, pay off wages payable, and pay off accrued liabilities. And the numbers just from up here are 613, 70, and 82. And so we're going to credit cash for the total of that, which is 765. So that's a fill in the blank number we just added. Now we also need an entry for the capital fund, where we have an accounts payable of 50. So we're going to debit accounts payable for 50, credit cash for 50. Now, again, depending on how you were doing it, any of you who are taking Greg's Not-for-Profit course won't be listing the fund like this. You'd actually call it cash capital fund and accounts payable capital fund. So you'd put the name in it. So you'd say debit accounts payable, capital fund, credit cash, capital fund. So you can do that. In real life, of course, you'd have account numbers, which would be broken down by fund, and you'd use that. So just do whatever you feel is right when you get to work. But you'll be able to see what they've done. And on Connect, generally you just post to the correct fund. If they do have you doing entries, it'll be like this. I'm just kind of keeping it separate to remind you they're separate funds. So hopefully that makes sense. Okay, now we said that there was deferred revenue of the United Way grant, and that would have been from year 5 because it's received in November and it's for the next year. So it was deferred last year because it's restricted in that we can only use it this year. So the deferred revenue from year 5 was the grant from United Way. We need to recognize this in year 6. So that's the general fund. And we're going to debit deferred revenue 440. Remember, we're closing it. And credit United Way. Generally, each revenue account is going to have, if it's different grant people or organizations, it would all be listed. And if it was contributions, it would be revenue contributions. Okay, pledges received at the beginning of the year were collected in full. Again, that doesn't usually happen. And if not, you'd have an allowance account of some kind. But in this case, pledges receivable of $490 were collected, and we notice they are in the general fund. If we didn't have the statement and it just said the pledges of $490 were collected, we'd know it was in general because it didn't say anything about restrictions. So we debit cash, $490, and credit pledges receivable. Now, some of the issues students have with not-for-profit accounting in 410 is not so much understanding the funds and when we defer it and when we recognize it, because that's kind of new information. What people get thrown off with is these old entries. How to close off an account payable, pay cash, and sometimes they have to reverse their entries. So be really careful. This looks, oh, really easy. Yeah, you just do that. Just kind of remember your rules from 316 when you last did journal entries. Okay? So let's move on to part D on page 7. The fundraising campaign was held in March to collect funds for year 6. So this is the current year. Cash $1187 was collected. Pledges, of which 800 were expected to be realized, were received. And then it tells us about costs as well. So does it say anything about having to be restricted? No, it's regular operations, so this is all going to be in the general fund. So let's receive the cash first. So we got cash of $1187. And we have pledges receivable of 800. Now, the question is all contributions or revenues coming in. Is it in any way? Nope, it's for the current year, so we can recognize the revenue. If it said was for year 7, we would put deferred revenue. It doesn't. It says year 6, so we can recognize revenue right away. So revenue, donations, or contributions for 1987. So current year can record revenue. Now we have a second entry about costs. So we're going to debit raising expenses of $516, and some of it was paid in cash, $450. $50 is owed to suppliers, and $13 accrued liability. Okay, so that's kind of like the adjusting entry at the end, where you know it, you haven't officially received the bill kind of thing, so that goes into accrued liability rather than AP. That's all. But it'll always tell you in the question. Okay. During year 6, agency announced a plan to construct an addition to its building. Estimated cost of $1,500. Remember, it's in thousands. Still, that's a pretty inexpensive building, especially since it includes equipment acquisitions. And then it tells the process. So the government announced a grant of $600 in year 6 to cover the first phase and has remitted $450 of this with the balance promised in year 7. So that's one piece. The agency spent $103 on equipment, $91 has been paid, $12 is owed. That's the second piece. And then at the beginning of the year, so it's telling you it's on the balance sheet, they had $62 on hand from a previous building campaign, an unpaid liability for capital asset purchases, and so on. So that's just on the balance sheet, no entry. It's just describing the situation. So, which fund does this go in? It can go, we've got 3 funds: endowment, capital, and general. Do you think it goes into general? And besides, just take a note, the general can sometimes be called operating fund. Okay. So this whole thing has to do with capital. So this is all going to be in the capital fund. So let's do the first one. We got cash for $450, and we got grant revenue receivable for $150, and that's just to fill in the blank. And credit revenue, government grant for $600. So you just subtract those to get the $150. So my question to you is, how come I can put it as revenue? I thought I was supposed to defer it and put it in deferred revenue until I spent the money. Well, because it's in its own fund, it can immediately be recognized as revenue. So we don't need to defer. As it is directly in the capital fund. Okay. If it was some kind of operating grant or we didn't have a capital fund, then it'd be deferred revenue until it was paid. Okay, the second thing, we bought equipment and it's still in the capital fund. Equipment for $103, credit cash for $91, and credit AP for fill in the blank of $12. So you see these entries are pretty straightforward. It's just you have to remember, are you trying to defer the revenue or recognize it right away? Okay, I'm going to end this video and I'll start on with the next one in a second.